Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's been another huge week. We've got a few hundred new subscribers joining us on this journey, and if you are new, I just wanted to let everyone know that these videos used to only be 20 or 30 minutes, and we haven't really changed the format at all, but there's simply so much news these days. We cover all the macro headlines, the financial news, and then we get into the crypto headlines, and these days there's just so much overlap. The world of decentralized finance and money is just gradually moving into the real world, and hopefully you guys understand why I've been making the videos like this for over 3 years now. So some incredible interviews again this week, particularly the yield farming. This is the hottest topic on the planet right now. Some of these returns and the risks that come with them. We'll talk about all that tonight, but we'll get into it in just a second. I know a lot of these interviews and videos that I make have got a lot of the little acronyms that people don't understand. So guys, over on the website, in the resources hub, this is all free. We've got hundreds of these terms. So if you ever watch a video or there's a post and you don't understand something, the team and I are continuing to put out as many of these as we can for free every day. So please send your friends and family over to nuggetsnews.com.au if they want to go down that rabbit hole and learn about cryptocurrency and the world of finance, and particularly to our new members. So over 110 new members this week in our premium area. It is a family. We've got a great write-up, for example, from Adrian, who runs Crypto Tax Australia. So coming up on June 30, guys, make sure you have your house in order. But particularly, a lot of people can deduct things like the membership to our group and subscriptions, crypto-related things, depending on your individual circumstance, as always. But head over to Adrian's website. That's always in the links in the description down below. Over on the website, we've got discounts if you want to use the service or any of their partners. So look, we are really thankful for our partners. We're still running this deal with eToro. So they've recently added zero fee trading on all their US stocks, as well as that $100 Bitcoin bonus that we are giving out to those that sign up. So again, that link is down below. Take advantage of that while it does last, guys. Okay, the final thing I want to mention, I know that some of these videos in the world seems a little bit doom and gloom at the moment, but look, that is just the news that we're reporting, and there's plenty to still be bullish on and plenty of good in the world. And this was a documentary that I absolutely loved. So Journeys to the Edge of Consciousness. I don't think it's on Netflix. You might have to buy this one off Amazon. But guys, I highly recommend it. It was well worth a watch if you're into psychedelics and consciousness, the mind. And I do really, really love that stuff. So thanks to Charting Man Dan for the recommendation. Okay, let's get into the local news. Some figures out of Australia here where our balances weren't anywhere near as good as forecast. So they actually came in $60 billion worse in the budget, and that surplus is now well and truly out of reach. But these are the sort of things that all governments around the world are facing, and with so many people on job support, for example, they're increasing this $75 a week. So that's quite a big jump in percentage terms. And I think this is the sort of the start of inflation, when more and more people are requiring more and more money from the government, and some people are getting more than they were before with a job. So these are the sort of things that we are watching. Which governments are fearful of going into debt, and which are just going to go all out and spend. And when we get into the US news, obviously an election makes a big difference how much you want to spend. But Alex Joyner, who is IFM chief economist, someone I really respect, follow him on Twitter. These are sensible people that are now talking about helicopter money for infrastructure. You know, these things were crazy, negative interest rates. You know, none of this stuff was in textbooks 10 years ago, and now it is just almost the new norm. These are the job numbers from Australia. We can see the change quarter on quarter, year on year from the different industries and which sectors, I guess, have been really hit the hardest. And a lot of it is that service sector economy. We know in Australia, we need to do more manufacturing. That's the sort of stuff that we've got to bring back onshore. And when the globalization, I guess, is breaking down, again, this is where you run the risk of inflation. If we're not making those goods and we've just got to print more of our money to try and buy more off other countries, that cycle can get pretty vicious and become a slippery slope before you know it. Now, more and more millennials are moving to these regional areas. There's a combination of things, but certainly housing affordability. And look, I often joke, and you guys give me a hard time about Tassie, but it's one of the things that we are seeing in the numbers, whether it's the boomers retiring or just the millennials. If you can get a job and you can work from home, a lot of people are moving to regional areas now and choosing that lifestyle. So one of the things that it has hit is the commercial property sector, but also just people moving from any suburb, really. We're starting to see that uptick in listings again. So Martin and I will do our deep dive into the Australian housing market and economy the end of next week. So I won't touch on that too much today, but it's certainly now being reflected in the numbers that more people are starting to list now that some of those COVID restrictions were being lifted. Now, what about the poor landlords? So one of the things that we've been talking about is you can kick the can down the road, or you can bail out the little guy and you can put the rent on freeze, but then it's the landlord that's now being hit. And now, is someone going to save the landlord? Did you take that risk if you have 20 investment properties or you had 20 Airbnbs? Were you just trying to get by, and was that a good investment? It's not your fault that COVID has come along. Does the bank, do they need to get that money out of you? At the end of the day, do the banks end up getting bailed out again? So it's sort of which segment of the food chain do you bail out and when? And at the moment, it's the top end, the wealthy, and banks that basically have got a backstop of central banks these days that have got the most. And this is where the government and the central banks are sort of rethinking their plans about how do we help out the little guy a little bit more. And at the moment, I've got a huge whiteboard video coming out this week all about this, but everything has to go through the financial system quite literally to get to the little guy, and that can all change with the world of cryptocurrency and apps, the new fintech world. All right, so one of the things that I posted in the group about, and we had a great conversation, I think there's 38 comments on this one, was all about, we're starting to hear some whispers, and a few of you have sent me these messages. We don't know if it's sure if this is true yet, but workplace safety, so occupational health and safety, some of the big corporations are now bringing this up, saying if everyone's going to be working from home, does that meet the requirements? Now, there's two thoughts here that A, they're just doing their job, or B, are they trying to make it hard? So the big corporates that have a lot of investments and they've maybe signed a 5-year lease in that big corporate building, but now they don't want it anymore. They're trying to downsize, and the owners of that property don't want to let them downsize. They want to keep getting that renting because they've got a huge loan to pay off. So are they trying to create a lot of headwinds and almost make it hard for the average guy to work from home? Or if you do, you're going to have to build a new office and have something separate to create jobs for the building sector. So look, I'm not sure where I sit on that one. I'm really looking forward to hearing your guys' thoughts on that, about whether or not they're going to make you legally have a dedicated work from home area. And I mean, if it's true, that is something that you can only see happening in Australia with our precious property bubble. All right, Liberal MPs backing the proposal for more first home buyers grants, this time accessing money from your super. So a debate that we've kind of touched on before. Look, do you think that getting on the property ladder is the be-all and end-all? I mean, should we be letting people access their super at all? It's meant to be there for your retirement. Now, again, some people think that there's not going to be a nest egg there and governments are going to have to dig into that, or someone else is going to have lent it out and we're going to have insolvencies either way and the companies they're invested in. So a lot of schools of thought about superannuation, but look, property, once again, that is the priority, the first thing they're going to focus on and make you dip into your savings to keep that property bubble going. ASIC are suing CBA, so another big bank in the news. Remember, all our big banks just got dragged through the ringer with the Royal Commission, and yet since then we've had all these even worse allegations come to light. So this time CBA forcing clients into these bad payments and investments because they were getting kickbacks of the allegations there. Australians who withdrew their super to, we're hearing things like gamble. Maybe some of you have invested in gold and silver or crypto, but look, all sorts of things. But for those that actually didn't lose their job and they did access their super, that was the wrong thing to do, and you are going to be under investigation. So possibly facing a hefty bill there. Now, I've said this a lot that I think Philip Lowe, Australia's central bank head, is just too nice a guy, and he's actually come out and questioned this stunning ASX rally. We spoke about this last week, how no other central banks are talking about this. They're talking the market up. They want to push it as high as they can. But he knows that this is going to cause big problems down the road further. So when we see statements like this, the Australian economy is outperforming, and that is true to some degree compared to these other places, we're becoming that cleanest dirty shirt in the laundry. But the coronavirus shadow could last for years. This was very different to the talk about building a bridge, 2 to 3 month window. We're now there, 3 months since lockdown, and I think Philip Lowe is one of the most honest central bankers. So when he's saying things like this, I think they're now trying to almost cover their backs and warn people, because, when this drags on for possibly 6 months, 12 months, you don't want to be the guy that looked back and said everything's going to be fine. And with so many financial crises in recent years, people are now changing their tune. We see a lot of the big names talking about gold and Bitcoin. So are they foretelling of something that they see coming down the pipeline? Now, either way, I wouldn't really call this a second wave. Our numbers are really low, and I think we did a relatively good job, whether that was luck or not. But Victoria has had one of their worst days so far, or the worst day. And I was shocked to read the stat that the testing on the way back into the country is not compulsory, or at least one of the stages is not compulsory, and 30% of people weren't being tested or screened. So I'll try and find that tweet in the exact figure that I read, but it's no wonder that if there's 30% of people that aren't doing the right thing or slipping through the system, that we're starting to see these cases, because it's coming from the general population. Now, when we look again at our mobility trends from apple.com, we see America, people are out and about in a big way. Most places now are back above that baseline. So when we start to hear these stats like Florida positivity rate is 12.4% on a Friday, 12% of all people being tested, we really are starting to get signs that this could be far more widespread in the US, because they never really got it under control to begin with. And some of these states didn't even slow down. There's just a straight line up. So the media are saying second wave, but some places have just had a steady trajectory, and it really is the news cycle that's made people forget about it. I mean, if you look at the numbers, it's actually very clear what's been going on. So hospitals are filling up once again, but it's a new kind of coronavirus patient they're reporting. So some people are very ill, but others are having no symptoms, particularly temperature, which has been used to screen. So look, Dr. Fauci, he's saying that they're considering changing their strategy. Trump was saying that he wants to have less tests because we're only seeing more numbers because we're doing more tests. His media crew came out the next day and said, no, Trump was joking. And then later that day, Trump said, no, I definitely wasn't joking. So, I mean, the fact that he's no longer favorite in the US election absolutely shocked me. So as you guys know, the FTX crypto exchange has got an odds on the presidential market. And Joe Biden was 3 or 4% back in February. And he's now 55%, and Trump slipped to about 44. So, I mean, who knows? From what I've seen, Joe Biden is really struggling to get sentences together. He's quite old, but looks like Trump has really fallen out of favor, whether that's the media playing it up. Again, you guys let me know in the comments what you think, but these are just crazy times when you think about who's going to be leading the biggest economy in the world. So it's not just the US, we're seeing, Brazil, Germany, a lot of other places still trending higher. But we did have a few little articles and some studies out of China. It's currently undergoing peer review. So as always, look, I'll keep an open mind and wait for more data to come in. But we do think that we're now seeing a mutation on one of the surface proteins, and the mutation, crazy to think about, the one little amino acid change can actually make the surface protein stronger. And now that virus is more capable of attaching. So if that is the case, we've got a mutation. Early reports are saying that it might not actually even give you immunity if you've already had it, because it is different in the way that it operates, that surface protein. Not only that, the vaccines and some of the medications that we're targeting that, obviously they might not work as well if it's a different surface protein. So look, that is just one of the many things that we're still finding out. Reports about other organs and tissues that this virus can damage as well. So it's not just your lungs and your airways. It's very clear to me from what we're reading that this is a more, even a blood and an autoimmune disease. Inflammation can be the problem. We're hearing about heart attacks and strokes strokes. So look, that is a small percentage of people. I don't want to scare anyone. The numbers are still really low, but we just need to still take it seriously until we have all the information. I guess that's all I'm saying. So Raoul's tweeted about Sweden. A lot of people saying, look, they did a light lockdown or they didn't have full isolation and they're fine. Well, that's obviously not the case. They've trended higher. They've had more cases than their neighbours that have got similar, demographics and whatnot there. So look, you can twist it however you want, guys, but whether you're in lockdown or you're not in lockdown, it looks like there is still this spread for the time being. So you have to just be safe out there. All right, so some Americans are avoiding going back out to the stores again. So people have opened up, put on some staff. They're not getting as many customers, and now they're maybe shutting back down. And this is something that we did predict, because if you're only making thin margins, people aren't coming back. There's no point being open. Now, what really, I guess, frustrates me, and it gets to the root of what is money and who gets to spend it, when we hear things like the government considering cutting thousands of jobs to save $1 billion, when trillions of dollars are being thrown at Wall Street, and yet here we are, the government that can spend money. 42 hospitals are closing and filing for bankruptcy. These are the sort of things that should be no-brainers. The government spending money to keep these people in the job is not going to cause inflation. Those people were already part of the economy, and yet here we are letting this stuff fail when Wall Street's getting bailed out. It makes no sense to me whatsoever. And that's teetering into modern monetary theory. Again, it's a big conversation for now, but I think those sort of things, the benefits just outweigh clearly any negatives. So White House trade advisor has said that the China trade deal is over. That really threw the media into a spin. Trump came back out and said, no, it's certainly not over. It's all back on and everything's fine. The US are now throwing $3 billion of tariffs on the EU and UK at the moment. So look, people are just firing from the hip in these global trade wars. Trump claims that Germany owes $1 trillion to NATO for the US being the world police for so long. And here the numbers are pretty clear. US exports and imports, the annual growth. So it has plunged down around 30, 40, 25% there. And I think China know that they've got the US between a rock and a hard place. So they're saying, any US meddling in Hong Kong, it's going to completely derail that phase 1 trade deal. So they're using that as a threat. The Pentagon comes back and lists these Chinese firms that are backed by the, China's military, and so much of this software world is where the new, I guess, war is being fought to some degree. And China's economy, look, whether or not you believe their numbers, the government's going to do whatever they can to keep their economy going. So look, that's kind of what the US and the Fed are doing as well now. But China's rapid rebound, if they don't have as bad a second wave, if the US really lets this get out of control, that looks bad for them. And China can kind of sit up and say, well, we did better than you. And that is going to cause so much tension. The blame game is going to flare up again. So these are the dynamics that are in play between the world's two biggest economies. The IMF, these are the sort of statements that are trying to warn people and say, see, we told you so. A little bit like the World Health Organization. But IMF slashing their global forecasts, warning about high debt, unemployment. You guys know that list. And we're seeing it start to come through now. So US home mortgage delinquencies, highest rate since 2011. People can't pay their mortgage. Now, the Fed have had a bit of an interesting move here, and the markets did not like this at all. So the Fed orders banks to suspend share buybacks and cap your dividends. Now, they actually did a 180 very soon after, when a lot of the time this has already taken place. So look, share buybacks are down a little bit, but I mean, really, in the grand scheme of things, they were already, a lot of it had been done. So there's no real point saying, look, we're capping it now. And they're pumping money into them through the back door anyway. So bank stocks surged after the regulators then came out and said, well, we're easing the Volcker Rule. So JP Morgan, for example, up 2% on the day. That Volcker Rule about the reserves and those requirements and not letting the speculation take place with customers' money, okay? These are the sort of things that we've been trying to fix since the financial crisis. and they're just backpedaling. So this is freeing up billions of dollars, not letting them have to sit aside and say that's not allowed to play in the derivatives world. Well, now they're saying that they can. I mean, they've already eased other things about reserve requirements as well. So $40 billion break for swaps. Once again, banks get it easy. Any wonder why people are frustrated? Banks are swimming in money. Deposits increased by $2 trillion. So that's just the deposits they've got on their books from the Fed and these bailout programs. They haven't actually lent that to small businesses or individuals. It's sitting there just on the bank's balance books and helps them pay their salaries and the CEOs. It does not help the real economy and Main Street. Junk bonds topple monthly records, a party like none other. So these are the companies that they've already done the damage. Look at the share of triple B rated corporate bonds in red. That is just growing and growing. The quality of the companies that's issuing this debt is getting worse and worse. The zombies. And these companies, they've given their CEOs the millions. They get the shares, they push it to the Robinhood traders like we saw Hertz trying to do, and then you announce your bankruptcy once you've already made your millions and you get off scot-free. This is the problem with having a corporation set up where there's no individual that can go to jail or be fined. Now, I want to throw this in there as well, a little bit off topic. I've covered it in the past, but another example where Bayer is just paying out $10 billion to settle these cases. So there's a number of cases around the world now in different countries where they've settled but not admitted any guilt. So there's a lot of, I guess, evidence now that this can cause cancer. And yet Monsanto, they continue to get away with it. And this is quite widely used in some countries like the US, whereas other countries like the EU have pushed back quite hard. It's illegal in a lot of countries. How crazy is that? It's illegal in one country and widely used in another because of how corporations run the world these days. So last week we spoke about Steve Mnuchin and the Treasury being pressured to talk about who they gave all this money to, and they had to cave and give in because of the public demand. And yet what they announced was in fact a very small percentage. I think it was 14% were on the list and being revealed. So the other 86% of those trillions and trillions of dollars, we don't know who it went to. So something dodgy is going on there when they say that they will and then they go back again. And he says, we never agreed to full transparency. We only agreed to this 14%. And you name the companies that have got the least dirt on you, I guess. So this was a good little tweet, a little meme, just to lighten the mood in the middle of these long episodes for you with our friend Pal there on the Titanic. And he's always got the stocks back. Every single member of the Fed board is a millionaire. Some of them are invested in private equity funds, BlackRock, iShares, their mates that they hired to buy all these ETFs to help their funds that they've got invested. I mean, this is nuts. Is it in violation of Section 10, Part 5 of the Federal Reserve Act? They're just twisting the rules these days and nothing even matters. So the low interest rates, it's meant to make loans easier for average people to get in businesses, but they don't want more debt. So it's just driving that gap because the corporation can borrow as much money as they want. It doesn't matter if they default or go bankrupt, whereas the individual, they don't want that on their record. So these are gaps in ownership of equities between different races. So no matter which way you cut it, it's not even really a race thing. It's more just the wealthy, the haves and the have-nots. But the Fed keep denying this, and yet every data point you look at, it's very clear it's causing inequality. So Fed Bullard comes out and says that, I don't see any signs of damaging asset bubbles. And yet, if you actually look at these numbers, it's the biggest disconnect in history between value and profits. The inequality's there, it's widening. The top 5 stocks, all that wealth, it's just been concentrated. The shareholders get all the benefit, but they're now in the crosshairs. So Apple's easy ride from US authorities may be over, and the Justice Department, again, they have moved over the, all this power that the App Store have over their different developers. We touched on that last week. It looks like it's progressing. Naval here's come out and he's talking about how, your phone, the fingerprint scanning, the retinal scanning, Face ID, this is all going to be part and parcel. Apple's going to get all this power. The big tech companies embrace and extend. So moving towards, I guess, not being able to get on a train or into your own apartment unless you've paid your bills, unless you've got all your personal information in these companies, these private companies that become the gatekeepers for everything around us, which is pretty scary. And Andrew Yang is someone that is trying to push back against all this. So he's talking about big tech having to pay a data dividend. If they've got your data, they've got to pay you for it, and they've got to admit that they've got it. So I think that's where all the profits come from. That's why these platforms are free to use. You definitely should get something back, and that's where the world of, Ethereum trying to build Web 3.0, a new fairer system, that's really where they came into it. Not only that, but I think Andrew Yang was running on really universal basic income, and people thought that was so left field and weird, and now here we are, basically 30, 40, 50% of people are on some form of government support, and universal basic income looks like it is going to be the norm in a few years. Apple will now require developers to disclose information they use to track you for digital advertising purposes. Never once were their names mentioned, but make no mistake, these companies are Google and Facebook. So they all work together, all those big tech stocks, all that metadata. You guys have seen the ads pop up. You see this firsthand. You're very familiar with it. Now, a lot of companies have started to boycott this, walk away from Facebook. Facebook have tried to stem the bleeding here early, but it's already entered the big league. So a lot of big companies, Unilever, Coca-Cola, they're looking to leave Facebook. And I know as a business, we've been looking to move away for a couple of years now, but it is hard, and Facebook is so all-encompassing. So we're very close to getting off that platform and launching our own app and platform as well, guys. But it is just the reality, isn't it, that so many people are on there. It is a platform that has people's attention, and at the moment, that is where we have to be for the time being to survive as a business. So quants are sounding the alarm. Everyone is chasing the same data these days and web scraping the same websites. And we know that all these hedge funds, the numbers these days, 90% is just digital trading, computer algorithms. This is where they're generating their return from, all the AI and machine learning. They're all getting the same data. So now these data companies are the ones that are really capturing the wealth. No surprise that stock market analysts have been upgrading at the wrong time. This is a little bit like the junk bond, the graders, where they always stamp everything AAA, and then once they start to fail, they start to reprice them. But here we have all the analysts going from extreme pessimism when we're at the bottom to extreme optimism and upgrading their price targets for the stock market once we've had this big bounce. So again, these are the sort of contrarian indicators that a lot of people like to look at. Now, some investors are out there making these big bets against the stock market. If you've been shorting this market, you've just been beaten up. And there's actually very few short funds left compared to a few years ago. But look, nevertheless, there's been a big net short position built in the S&P 500 futures markets, now at the highest position it's been since 2011. So look, this rally's been hated, but if there's that many shorts, we saw what happened to Tesla. It can cause a short squeeze and continue to drive markets higher. So look, the Fed promised the economy $2.3 trillion and it hasn't even come close so far. That's just the reserves that are sitting in the banks, or the government have got a lot of money in their treasury account now as well. So is that going to get spent? Is the next option for Trump to put $1,000, $2,000, $10,000 in everyone's account to keep them happy and buy the vote? Maybe that's how he pulls the trigger at the last minute, props up stocks, tries to buy everyone off. I'm not sure. But this is when the inflation dog can finally come out and bite. People are looking for real hard assets. That physically held gold in the ETFs has gone parabolic. That gold needs to be bought by the good quality ETFs that actually hold gold. But look around the world. Number of countries are just increasing those holdings ever so gradually. GDX, GDXJ, I've spoken about this. The juniors are starting to outperform. I think I mentioned it specifically last week that this was a trade that I was looking to get on. GDX and particularly the GDXJ. This has been a good performer. If we just have a look at the stats in the past week or so, I think it was up 10% or so on the week. So guys, this is where you want to look, as well as the silver stocks, with silver lagging as well. So look, China are the ones that are really looking to become the number one economy. They want that reserve currency of the world, the digital yuan that they're pushing and pushing. So collapsing dollar, look, that's probably good for their system. That's why they've got so much gold. And you see all these Chinese gold miners that are gobbling up a lot of gold companies around the world. So Australia is very familiar with China buying up assets. But look, the US buys up a lot of Australia's assets as well. So I think these days any country is stupid to be selling the real things, your commodities. You're selling it to a central bank or another country that's got a money printer going brr. So you're selling that fiat money that's printed out of thin air for nothing. And you're selling them resources and hard assets. And that's where this game eventually breaks down and the race for real things heats up. And that's when we can see again inflation for commodities and gold. Final thing I want to finish on here, which is scary. If you've been down the rabbit hole for a number of years, this term, great economic reset, global reset, has been thrown around in the conspiracy circles for so long. And the World Economic Forum put out a piece this week, and they're now using this term. Look, let's just leave it for there. We might dig into that in more detail, but head over to that website and have a read about that if you haven't already. Okay, so let's get into the crypto news. And I just want to start with a bit of a reminder that Real Vision have got their crypto gathering coming up. That is starting tomorrow and the following day. So I've got a 10% off for you guys there. I think we've got 20% off as well for members. But either way, there's 2 panels I'll be talking on here. So finding your edge in crypto, and we've had some fantastic early calls this year. So how do you get that edge? As well as a chat with Kevin and Simon, who I've had on the channel before, all about DeFi. And we recorded this one the other day. It was an absolute cracker. So bleeding edge stuff from Simon, who's a 2010 Bitcoin whale, and Kevin, who's one of the founders of Delphi Digital, who did the brilliant research. And look, we just bounced off each other so well, talking about the world of DeFi there. All right, so just a little warning, the scammers are back, and that's normally a sign the bull market's back. Have a look out, guys. Make sure you've got the real name, and we'll never send you messages or ask you for money or start casually chatting EK, so it's always a scammer. And I thought this was pretty funny. I said, our content's hopefully been pretty good lately when we've got scammers letting us know that, hey bro, I really love your content. Don't think bad about me. I'm just trying to survive, and give us $2,000 and I'll be off your back. So I sent him a message that I've got a few friends at Twitter that aren't going to look too favorably on him either. So hopefully get the blue tick sorted soon, guys. And that makes it a lot easier to recognize the scammers and who's not. So speaking of the big scams, we've got Plus Token. They're moving a lot of their coins around again. So this is creating a bit of fear in markets, whether it's big chunks of EOS or Bitcoin or ETH as well. Look, just be mindful of that. We hope the exchanges can catch that early and not let them sell. Huobi are returning to China, so it's pretty clear that if you get on good terms with the government, you're allowed to set up there, whereas someone like Binance, I don't think is on good terms, so they haven't been able to headquarter in China officially. New Zealand police managed to freeze $90 million, linked all the way back to BTCE. So some of you will have never heard of that exchange, but that was one from the very early days that was involved in a lot of laundering because it was a darker world back then. Chinese mining company eBank possibly listing on the NASDAQ. So with all the macro news we just reported and stories that America isn't allowing Chinese companies to list, that's going to be really interesting to see if this goes ahead. Not only that, but we've been talking about the friction between Bitmain and the owners there. It looks like there's a bit of a peace offering there, trying to buy $4 billion worth of shares. But this political playground of the mining space, because it's going to become a multi-trillion-dollar industry, in my opinion, there's no doubt about that. It's just where it happens, just like we've seen the OPEC and the oil wars. So the US blockchain firm buying 17,000 Bitcoin miners from Bitmain, from the Chinese company. Are they going to have something wrong with them? The world's been that crazy this year, nothing would surprise me. But consumer watchdog blocking Canadian Bitcoin miner from US Power. So with all the miners setting up in the US, is that now a power play against Canada? They don't want them to have the hash power. So this is where I see the Bitcoin mining wars going as well. A number of central banks are saying that Libra and Facebook was not the cause for them to start all their research. I definitely disagree there. You guys know that a year ago they were saying crypto is not a threat, it's so small. And now they're all creating their own. So the EU are creating a regulatory regime for cryptocurrencies, says economic chief. Sweden releasing a 98-page document all about central bank digital currencies. The Supreme Court have actually limited the SEC's power, or seeking to, in terms of the fines against crypto firms. So that's a really interesting development. We've seen a few little fines this week we'll get to in just a second, but Italy also looking to accept the digital euro. They want to get on with it. They've got nothing to lose, these struggling European countries of the bloc. And we've got Vanguard also launching a blockchain-based foreign exchange platform. So this is going to go live in the next few months. This is more, not so much a competitor. It's more about hedging the different forex positions rather than a true exchange. So mapping the SEC's future, Heston Pierce, who's very favourable in terms of crypto, there's a non-zero chance that she could take over. So that would be absolutely great news for the crypto space. But Telegram, this is what I was just getting at before, $18 million fine, but having to repay the $1.2 billion back to token holders. So not good news for those of you that were hoping that Telegram could keep going ahead. Germany's new fund is shut down. So this is something we've been covering about all the security token exchanges. It was meant to be the next big thing, and it's taken a long time to get off the ground because of regulators. We've got the ultra-rich in Monaco wanting to fund some social impact projects with security tokens. So again, these more friendly jurisdictions are where we're sort of seeing the early green shoots. FC Barcelona's token hit their $1 million market cap in 2 hours. Now, we saw the soccer club token sale fail over in Perth, so let's see if this one actually works out. But Binance are looking to also get into that payment space in Europe. So continuing to add these different payment systems. So the euro, Great British pounds, these direct bank transfers, Binance really stands to become this big sort of neobank. They've already got the blockchains on the back end. So when you think about what, say, Ripple's trying to do, or these other payment companies which are using blockchains or integrating with these other systems, crypto exchanges have already got that backbone, and now it's just a matter of them of getting the banking services. So they've gone at it from the other way around, and they do have the possibility of becoming these super global banks. So that's where I think the bullish case for Binance stands. Another bank that went under this week was the Wirecard scandal. So look, we did a lot of due diligence on crypto.com, and there was just a few little things that I didn't think were long-term sustainable in their business model. And now we've got this story come out about the $2 billion from Wirecard that's gone missing. Crypto.com and 10x have been affected by this because of their debit cards, but they did say that that wasn't where the money was held. So that side of things is fine and your money's safe. But I don't think that this story is over. That's all I'll say there. Status have launched their key card. So this is a company that I do really like. Heavily invested in early by Coinbase and a lot of those good crypto funds, A16Z. So Status is a cool little app, a Web3 wallet. It's going to integrate your card and a number of other things going forward. Monolith is another one, really trying to plug into DeFi and the world of decentralized stablecoins. I want to have them on the channel soon as well. So there's a lot of competition in that card payment space. Facebook have obviously got their WhatsApp trial in Brazil for their payments. I think they've paused that now, the initial stages of Libra. But another app that they're rolling out is prediction markets about world events. So who would have thought Facebook getting into prediction markets? I guess because they've got more data than anyone. But a few of the crypto apps that are in this space are Flux. So again, you can bet on the odds with your crypto there. Augur is the decentralized one, with Augur version 2 launching very soon, and I'm so excited for this one. I just can't wait to see what this looks like. And some people are already implementing front ends using Augur. So Polymarket Beta is another one where you can hop on over, connect your MetaMask, your Ethereum wallet, and start to make bets. So really cool stuff. The prediction markets, betting, gambling, it's what everyone's doing at home on the couch at the moment, I guess, aren't they? Tezos, they are looking to go live with their Striker token. So this is a DAO, like a decentralized tokenized hedge fund. This is what Ethereum first tried to do with the DAO that got hacked. Base layer protocol wars, it's heating up. So AVA, this is Avalanche, they've raised another $12 million. The space is really heating up for that base layer chain. Who is going to be the winner there? But we know Ethereum does have the head start. In terms of DeFi, there's a lot of competitors there as well. So there's some great articles about Thorchain, for example. A lot of the hype was around Comp and Balancer this week, but there's good governance tokens on other chains at the moment that are trying to get into the liquidity mining, the DEXs, the DeFi space. Binance finally launched Digibyte. So Digibyte, another one that I think does have a little bit of hope of breaking into the DeFi world. Possibly Waves as well, the other one that I've been reading about. So these early chains with big communities, I think they're the ones that can integrate easily into other blockchains. Now, if you do want the full rundown of yield farming and DeFi, the risks and opportunities, the two videos I did this week, first one with Kane and the second one, the monthly Ethereum update, they've got all the detailed timestamps to really save you guys time, but these were just amazing episodes, answered all your questions. Go back and look at all those terms on the website if you don't understand any of those, but it's so important. This is where all the opportunity is lying at the moment to profit. And at one stage last weekend, it was 100% annual interest rates you could earn. So that does come with the risks. I won't get into all that at the moment, but last weekend, needless to say, one thing after another, the yield farming meme, Coinbase listed compound, huge jump, and I did warn about it, guys. Look, whenever something goes parabolic, it is going to dump, and it touched 400 on some exchanges, and it does go down hard. So never FOMO. Look for the next opportunity and move on. Now, there's a startup that's actually forking compound already. Brains Trust is the name of that one. We'll see if anything comes out of that. They've already raised $6 million to fork compound. So look, this is starting to remind me of the ICO bubble when you hear about these terms being thrown around and how much money people are looking to flip these and double their money overnight. Balancer was up 250% on day one. I mean, it's definitely these signs of what we saw at the very start of the ICO bubble, which isn't good. So I love the technology, but I don't like, I guess, this side of things. Now, Balancer did stop FTX from gaming their system. So the way this works is you get rewards for donating liquidity. So FTX had a couple of their ERC20 tokens and they listed it and donated a heap of liquidity, and they were getting more than half the rewards at one stage. So Balancer said, no, that's not fair, you're too big. So what do you guys think about that? Were they playing by the rules? Were they exploiting and taking advantage of that and they shouldn't have? That one has divided the community a little bit. Crypto exchanges must stop acting like casinos in the wake of the Robinhood suicide. So look, we hear a lot of those stories like we just reported on, but there's also a very serious side of things. And I'm sure some of you know people personally that have lost a lot of money in the crypto space, and unfortunately people that have taken their own lives. So we have to always keep in mind when we're doing the education side of things. I guess that's what keeps me getting up and driven every day, is that there's a lot of good and hopefully there's a lot of money to be made, but there's nothing more important than education and making sure people don't get themselves tied up in these situations where they don't know what they're doing and they lose a lot of money. So liquidity on FTX has actually caught up to BitMEX. A lot of people have left BitMEX since that big flash crash a few weeks ago now, so that's great signs for one of my favorite exchanges. In terms of the decentralized world of trading and options, that's really heated up. So Opyn raised $2 million again recently. We've got a long list of options protocols that we did discuss in our Ethereum episodes this week. Parify have invested in Kyber. A lot of the buzz around these different protocols. The Kyber, another one that we got behind a few months ago that's now up 1,000% since we covered it when we saw this big catalyst upgrade coming. And these improvement around tokenomics are what get me really bullish. That is what we're looking for, to pick coins that are going to go up 1,000%. Now, Tim Draper has backed a little DeFi project. They've raised $6 million, DeFi money market. Well done to the guys in the group. Again, a few of our senior members who do the research were onto this one early as well. That's been a great performer. And veteran commodities trader Chris Heimeyer going all in on crypto. So when you see the Tim Drapers of the world, these experienced guys, Paul Tudor Jones, man, oh man, there is so much money flowing into the Ethereum and DeFi space. Hard not to be excited. I know another one of the decentralized ways to raise money is the Gitcoin grants. So how this works, guys, is if you head over and donate, say, $1 to our grant, the smart contract will match it. So they'll actually give us $8 for every $1 that you contribute, which is very, very cool stuff. Thanks to everyone that donated. We had $300 or $400 come in Aussie dollars last time, and that was enabling me to hire someone else. So we've hired another junior researcher. Thanks, we had hundreds of job applicants and got through all the job interviews this week. But yeah, the higher this goes, the better the quality the research gets and the more hidden gems we can bring to you guys. Web Cloud, another one that's raised $20 million, rolling out these Ethereum-based blockchain data centers, which is very, very cool, partnering up with AMD, who are listed on the NASDAQ there. So Consensus, again, pushing Ethereum forward. BSN is another huge announcement. So Chainlink just seemed to be integrating with everyone in the last few weeks, and it's no wonder that token is near the all-time high price. Some of you guys in the group have been onto Chainlink since, was it October 2017, I think? So well done to Kyle and a few of the guys that got into Chainlink have been holding ever since. MisiGo's parent company raised $80 million. So that's SYNQA, and they want to really push hard into the digital cashless societies payments world in Asia using the MisiGo network. So that's fantastic news there. A little project that this is going to be one of the 5 hidden gems in the research report we put out this week. So Melanomics, like I just mentioned, when we have these fresh tokenomics, that's what gets me really excited. Things like Rocket Pool that we covered back here for you, 1000%. What else we had? The AVE protocol, when we were speaking about the new tokenomics there, that led to a 4000% win. And more recently, synthetics. So when we saw that presentation back at EdCon last year, and I said this was one of the best 2 projects at EdCon, 5,000%. So guys, do your research, read our reports, make those decisions. There's always risks, and we're going to have projects that fail. But when you get in early, obviously having a few losers is greatly outweighed by these huge returns, and making sure you take some profit along the way. So look, when we talk about these sort of numbers, I think we're due for a pullback. We're seeing the euphoria and overexcitement. Some people are going to get upset when I say that, but that's just the reality. So dev communities are trying to stop the Ethereum and the high fees. So there's been a little bit of an attempt to raise some money for this, I guess, specific research, but I don't see the need. We've already got a lot of these projects that have solved the scaling problem. So when we look at the Bitcoin and the Ethereum transaction fees that have been pretty high again lately, we look at all these projects that we've got. I'm not going to name them all, but there's more than a dozen now that have got different integrations and applications already using this technology. The final couple of pieces of news we've got on Ethereum are the analysis of the Ethereum Improvement Proposal 1559. So this is all about cutting and burning those base fee rewards, which would make Ethereum more of a deflationary currency, more scarce, and that's where you get into my Ethereum stock to flow model that I've been putting out recently. All indications show that we're still on target to launch Ethereum 2.0. It's meant to be in June from what I read. So any day now, we should be launching the, is it phase 0 or the first testnet? Well, they've pushed it back a few times, but once it's up and running, I think this is going to get more and more Ethereum locked up. A lot of people excited, and maybe that rocket ship does finally take off once Ethereum 2.0 is launched. Ethereum dApps now hold 6 times more Bitcoin than the Lightning Network. We've seen this trend coming. We've got all the different varieties now of wrapped Bitcoin. We've got red Bitcoin, T Bitcoin. it's just great to see that DeFi space is exploding and Bitcoin can become part of that. Not only that, there's a lot of risks. So one of my favorites was Nexus Mutual. The amount of cover, so this is a decentralized insurance project that offer cover on different smart contract risks, and the amount of insurance and cover that they're providing reached a new all-time high. And the guys in the group that understand the mechanics of this one, you know why that number specifically is the most bullish thing for the token itself. Blockstream's Liquid network actually had a little bit of a bug this week, so a severe vulnerability that was picked up. So these things aren't perfect. Look, the Bitcoin maximalists rip on Ethereum and DeFi, and this is why I don't, because the next week we have a huge problem with a Bitcoin layer 2 technology. So the Lightning Network has been slow to pick up in the past 12 months after getting off to a good start, but soon we're going to see the most common wallets. So Electrum is a really good desktop wallet. It's going to be integrated, so you'll just click a button. Hopefully you won't even know that you are using the Lightning Network. You'll just think you're using Bitcoin, and these are going to be integrated into exchange, payment systems, wallets, and that's the next stage of Bitcoin scaling. We've got the first exchange-traded products to launch in pounds. So once again, the more countries, the merrier. As long as it's using real Bitcoin and Ethereum, I'm happy. And a long list of good news where people can buy Bitcoin. So PayPal is huge. Venmo, if we get those across the line, we're talking hundreds of millions of users. 7-Eleven, a few pharmacies in the US, but now Australia Post. So 35,000 stores across Australia. You can walk in with your cash. There's already so many. We've got Blue Shift, we've got Binance. The on-ramps are just immense these days, the ways you can buy crypto. Now, Kraken have pledged $150,000 to help open source BTCPay. So this is like an open source server for shops and retail stores, again, to eventually integrate Bitcoin in those payments. I don't think anyone really wants to pay with Bitcoin at the moment because they're hodling and they're hoping it's going to go up longer term. That's why stablecoins have taken off. But I don't know what you think about this. Isn't the point of Bitcoin not being able to have reversible transactions? But either way, the BPay server is possibly building in refunds. Okay, the last couple of bits of news here. We do have miners selling a lot of coins, or at least sending to exchanges, which normally we can extrapolate to selling off. Now, when we do see big sales, it can mean that we do have a drop incoming. Whether or not this is just paying the bills at a higher price, they're seeing $10,000 as a relatively high price after the halving. I think there's a little bit of concern creeping in about the stock market. Now, I did do a post this morning, or two posts for you guys about the technicals and what I'm looking at, but also how to hedge those risks and all the different options on how you can get into a stablecoin. And if you're on the sidelines and you're sitting in a stablecoin, maybe you want to get a bit of yield as well with those safer options. So that's all possible. Don't overcomplicate it. I know every time people think there's a dip coming, they sell, and often it doesn't pull back and it keeps going without them. I wanted to give you the 1 year update on Louis' portfolio. So Louis got one Bitcoin the day he was born, and by luck he happened to nearly pick the bottom. So he got in at 3,700, and by just holding, this is a little bit of a joke. So look, one buy, no trades, no sells, just holding. And that would be outperforming, I tell you right now, most of the traders out there and people that have tried to time the market. So that is the takeaway message there before we look at the charts quickly. Tomorrow's weekly candle close is going to be a very, very important one. If we have a look on the log chart, you can see that we're just sort of dancing along underneath this area where we've had 3 or 4 touches now. That's where we've got to get over to get people excited. But all eyes are on that stock market. And if that does roll over, if that's not able to get up near those new highs, the COVID cases pick up, the Fed have been pulling back on the amount of money that they've been printing. At the moment, very strong correlation between all those markets. So if that has a nasty, nasty sell-off and crypto follows, does the correlation break? Is that where the whales finally fool everyone? I think there's a lot of people that are going to be wanting to buy in this zone here around 8.2, 7.8. But if the stock market, which I think is more likely to have a deeper retrace than the crypto market, if that gets down to these levels, is crypto going to get down to 6,000? Look, you never say unlikely in this world, but I know for a fact that there's $5 trillion on the sidelines in the stock market world. There's a lot of money that wants to buy the dip and it's dollar cost averaging. There's a lot of new users. As I said it before at the start, there's 500 new people in our group in the past 3 months. You can't deny that the on-chain metrics show us that most people are hodling. There's very few sellers at the moment. So unless things get really bad or the Fed backs off the pedal or the government stops spending, I think their only way out of it is to keep printing and try and save everyone. They don't want a stock market crash as well as an economic crash. What's the lesser of two evils? And I actually think that's another bullish case for gold. They're better off pumping the gold price and having that sector go well than watching another sector collapse. So that's the thoughts I want to leave you with today, guys. I hope you've got a lot of value out of that video. Please smash that like button, share these videos around, subscribe if you haven't already, and I'll talk to you again soon. Cheers.